Hi guys, hi everyone. Good morning, good afternoon, good evening, guys. Wherever you are, welcome to Vantage webinars. All right, guys, shall we just begin our session? Welcome everyone. All right, so today, as you already can see, we will talk about multi-time frame analysis and how to trade like professionals. All right, and before I start the webinar, disclaimer first. Mm, Okay, everything in this video is purely educational in nature. All right, nothing should be considered as an investment recommendation. And risk warning, trading for brand and safety carries significant risk, is not suitable for all investors. All right. And the speaker for today, my name is Peggy. I'm an investment analyst and a prop trader. Okay, so this is the agenda for today. So basically, we're going to cover what more charts pattern fail, or why more charts pattern fail, the high probability approach, 5 high probability setup, and we're gonna practice together. Okay, and why more charts patterns fail. Okay, they will say that the trading style should serve your life, not the other way around. Okay, so the common mistake, okay, they will say that trading pattern in isolations, ignoring higher time frame context, no consideration of market structures, missing the bigger picture trend. The real problem is lack of time frame alignment, no trend confirmation, poor risk reward positions, fighting major market focus. Okay. So single time frames versus multi time frames. So single time frame trading equal to trading by. What does that mean? They will say that you are missing 80% of the market contact that professionals use to make decisions. Multi-time frame analysis equal to trading with visions. So see where price is going, where it's coming from, and where the professional are positions. So they're gonna be high probability approach. So there are 3 time frame rules that you guys need to take note of. The higher time frame, 10 direction, you can go to the daily time frame or and H4 time frame. Middle time frame structures and setup H1 and M30. Lower time frame, you use M15 or M5 for precise entry. Okay, so identify trend direction H1 or H4 and D1, and you can look for the trade setup H1 or M30, and for M15 or M5 you use for the precise entry. Okay, high probability trading principles. They will say that alignment, so all time frames should position in the same direction. Confirmation, wait for market structure break or retrace. Okay, contact trade with the high time frame trends. Conference, multiple factors support your trading. Patience, wait for all conditions to be met. All right. Okay, so high of the 5 high probability setup, they will say that first one, trend continuations. So higher time frame plus lower time frame for the pullback. Okay, structure break and retrace. So key level break with confirmation. Fail breakout, fall break plus reversal signal, zone alignment, supply and demand on multiple time frames. Momentum shift, so chain of character confirm. Okay, so basically, I'm going to explain it in the next 5 slides about all 1, 2, 3, 4, 5 mean. Okay, so for the first one, setup 1, trend continuation. So The professional favorite, they would say that trade in direction of the higher time frame after a pullback. So the checklist that you guys need to take notes or follow, which is higher time frame show clear trading structures, lower time frame pullback to the key support or resistance, rejection signal from the pullback zones, entry on a lower time frame with trend resumptions. Okay, stop loss below pullback zone, target for the next structures. This is a trend continuation. So basically, you wait for the pullback on the lower time frame and then you buy. So basically, you're gonna look at gold for the trend continuation, which is let me show you for XAUSD. Oh no, hang on. Yeah. For the trend continuation, they will say that the time frame clear trading structure, which is on the higher time frame. Okay, let me pull out this one. So setup one. Right here, the example. Okay. On the higher time frame, it is very obviously that price on uptrend. Okay. We know that this is a bullish momentum. Price still make the break of structure over here. Right? It's a break of structures. We already know that. Okay, break of structure. This one, right? Break of structure. And now price will stop at like, let's say, equal high because okay, price did not close above the body. I'm talking about body. It not close above the 3x70. Okay. And after that, let's say here, yesterday price was falling. On a higher time frame, we know price is the bullish. So you need for the lower time frame for the pullback at the key support and resistance level. So basically, this is our support level, the pullback, right? So you need to wait for pullback. So if you were to go to H1, okay, this gonna be your setup, okay, in H1 or M30. First, this is the pullback. And we can see that price has made the bearish momentum coming down. You need to go to the level M15 or M5 is gonna be your precise entry. Okay, from this high, oh sorry, from this low.
Baba, mommy, see you later.
Mommy meeting. For this high, or for this low and this high, okay, you will see that price has pulled back or have rejected like at 15%, but remember that our pullback is this level. It's about 3790, and the key level that you would think that would be the 3x, let's just say 3800. That would be the key level, right? That's probably had pull above, I mean break above. Okay, if I'm going to zoom in to see any confirmation, so you need to wait for price to come at least close to our level, which is 3800, or between 3800 and 3790. Okay, on the lower time frame, okay, price has rejected off slightly at 3, slightly below 61.8 and 3797, meaning that this level, right? This is gonna be the zone. So if you zoom in M5, what do you see? You see that the opening and closing is the same, right? We want to have very clear. Price broke below, and to where I'm gonna zoom to see is close to, okay, I'm gonna move this on. I'm gonna pull H4 from this swing high, a swing low to the swing high. Okay, so 50% fib and the zone. This is our zones, okay, with 50% fib and slightly 61.8. So this is gonna be the zones that we're gonna buy at the pullback support, okay. And what do you see here when price go to the slightly below 3,800? Okay, rejection price has made the confirmation. Price action bullish engulfing candle, so you can buy at the third candle for the open. So because why on H4 and D1 time frame, even if you look at the D1 time frame, which is a high time frame, the like on September 29, right, the day price closing with strong bullish candle. So the next day, if you want to buy, you're not gonna buy on the top. You need to wait for price to pull back on the lower time frame, which is before this one, right? Pull back at the support, in this case support level. You wait for the rejection signal, which is price action, right? You can see the price action in the M5 PA. You see the PA here in M15. Okay, and within it happened at our zones, right? And the next one, they will say that where is my oh, here. Okay, and after that, after you see the rejection, entry on the lower time frame with trend resumption, right? Resumptions, stop loss below the pullback zone, target the next structure. So usually go back to here. So where is your stop loss in this case? Your stop loss, you need to put below 3,3790 gonna be your stop loss, which is below this yellow box. And then next TP, because we know that price has go back to the all-time high. What if we don't know, right? What if we can't see? The first TP you should aim for at this break below 38.24. Right, from this support break could be pulled back. The next target, this one, and the third TP is gonna be the add back to the all-time high. Okay, price rising, the low time frame break. We know that this is a slightly pullback. Okay, and selling off, and now we don't know that price has already go back to the all-time high at 3x75, right? Okay, and have rejected somewhere around that. So this is for the trend continuation. All right, so okay. For the setup two, we will talk about structure break and retreat, high confidence entry. So enter after key level break and price retreat it as support and resistance. So the checklist that will say that higher time frame support higher time frame support the breakout direction, clean break of significant structures, price return to trade broken level, lower time frame show rejection at the retrace, volume or momentum confirm the above. What does this mean? They will say that, okay, let's say we will identify, okay, this is our resistance, okay, this is our resistance level, right? Price rally rising. Okay, if price have break above, meaning from this support it become your pullback. From this resistance it become your pullback support level. So we gonna wait for price. We already see that it clean break of significant structure, right? You need to wait for price to return to this support level, and then you're gonna buy. You can zoom in or go to the lower time frame M15, okay, always, or M5, right, to look for the rejection, which I just showed you guys now, okay, and then you can buy. Because the confirmation, those are rejection, we will tell you that, okay, is this price gonna go back and bounce from here, or if they're gonna really like break below the level and continue to go bearish. All right. Okay. For the setup number 3, fail breakout, trap the cloud, trade with smart money. Okay, fail breakout that lack higher time frame confirmation checklist. Higher time frame show opposite bias. Breakout occur but lack momentum. Quick reverse back inside the range. Enter on confirmation of fail move. Target opposite end of the range or beyond. Okay. I think this one is talking about like a fail breakout. So basically, if you want to trade for the breakout, you need to really, how to draw the range. And you need to wait for the body to close above the range. Then you trade. Okay. Set up number 4, zone alignment, maximum confirmation. So supply or demand zone align across multiple time frames. So checklist, identify key zone on a higher time frame. Same zone visible on middle time frame. Basically, here, right? So here, okay. You identify the key level on H4. Okay, let's say if H4 is bullish, with the bull. Okay, same zone visible on the middle time frame, which is H1. You also see it's a bullish. Okay, price approaches zone with momentum. Lower time frame show precise rejection signal. M, where is our entry? M15 or M5, right? Multiple technical factor at zone, meaning that within this zone, price, let's say, right, price is rising, it's a bullish, okay, and you are waiting to buy, right? So on the price is lower time frame, price is still like pull back, right? This is the resistance in H4. Okay, this is support in H4, for example. Pi is pulling. Okay, this is gonna be the support. There is a support in H1. Here, price falling here low time frame. Whenever price pull back to the support level, okay, here in M15, you'll see the rejection. Whenever you see rejection, you will buy from here. And this level, you can use Fibonacci from this swing low to this swing high. Maybe you pull Fibonacci, this gonna be the line up with 50% Fibo at this level. So you can buy. And you could use indicators such as the RSI. This is the RSI, okay? And you'll see that in the M15, RSI is also falling to the level 30. Okay, and then you can buy, because we want to buy, follow the higher time frame, which is H4 and H1. In M15, price has tested the support, and the RSI it show you the oversold. Okay. All right. Okay. And the last setup, momentum shift. So catch the turn early. Chain of character signal potential trend reversal. Chain of character, they would say the higher time frame show weakening trend. Break of lower time frame structure. Chain in swing high, swing low pattern. Momentum indicator confirm shift. Conservative risk management trend fading. So this is what they mean, okay? So basically, we know that here, price is make the bullish, okay, move. Maybe I would say this is our resistance level, okay, and then we go down here. Price testing the resistance level. You go down to the M15 or M5, okay, M15, M5. This is the H4. Okay, in the lower time frame, okay, you will see something like that. You will see the momentum shift here, okay, and price gonna pull back in the lower time frame somewhere around here, and then falling. Okay, when you go back to the H4 time frame, H4 time frame, I'm gonna show you with the rejection, and price close below the resistance level. Okay, your entry is gonna be here in H4 time frame. You go back. Okay, so meaning that's why they say that catch the turn early, meaning here. Of let me delete. Okay, let I remove, and I go back to H4. I'm gonna start news. I'm gonna move here. Let's say I mark out 3x70. Okay, and I was thinking that it is probably gonna reward from this level. We don't know because there is no ceiling, no resistance, no nothing, because price keep making the all-time high, right? Okay. So now, if we want to see, okay, it can be sell at like psychological number, which is 3x70, or anything that ending with 0 or ending with 5, we know that is psychological number, right? So we go down to the M15 or M5. Whenever you go down to the M5 or M15, okay, especially using M15, you'll see that you'll see the rejection. Okay, I'm gonna pull out the I side. You look at the I side, it's showing the overbought. Okay, go back to the M15. Okay, in M15, price closing with barrier and gap. Sometime here, but price go back up again. But the body is still close below the 3x70. Okay. 3x70 with M5, I would say that basically this is a lower, a higher high, higher low, higher high. Okay, higher high, should be higher high and higher high here. I will mark this level first, okay, and then I'll go to see, boom. With this, okay, with this, at the key level here, which is 3x70. First one is price closing with bearish engulfing candle. Bearish OB, right? I go back to the OB again, and then you see that they also break below this low. Okay, you see they break below this low like yesterday. You wait for them to pull back and retrace. This is gonna be somehow the zone that you're gonna look for the pullback. Okay, and you see that M15 have this strong selling, which early for the we just say price action. Maybe it's in here Okay, since here you might cut, okay, at 3x75, let's say you see the bearish engulfing, then you sell, but once you sell, price is what ranging. So if you want to draw the box here, the range, this is the box, price was ranging, and this one, it seems like price close below, the body close below, right? If you go back, if you just pull back for the retrace, you might get like break, you might get that like stop out. If you sell at like 38.64 and price, let's just say price go back up to the zones again. Let's say you sell here and then you hold. Let's just say you hold, go back up again. You can see that, okay, as long as price did not hit your stop loss, okay, usually you will put the stop loss at least 30 to 50 pip above the wick, right? Price go back up, and this is the another side of reversal. You see that this one showing your belly in gap, even though you're showing your belly in gap, but price still was ranging. Okay, if you be patient, if you don't be panic, okay, if price hits a stop loss, then we is okay, because we know that on the higher time frame that very strong bullish move. But whenever you see that, you see price forming the ranging or sideways, and then you should already know there will be two ways if you draw the box. Either price gonna break above to go upside or break below to continue to go bearish, right? Now, you draw the zone here, you see that price close below, break below the box, then you know that the momentum is shifting from bearish, from bullish to bearish on the lower time frame. And you go back to H1 have very strong bearish candle, right? So yesterday, on the lower time frame, either M15 or M5, if price close below, you may open the buy entry, open the sell entry, right? And if you want to wait for price to pull back, they did not pull back to the box or to the ranging. Okay, we go to the M15, they did not pull back at all. Let's say if you're gonna buy from this zone, right? If you buy from this candle here, right here, you will see that the rejection for you at 48.56, right? Price rising is about close to 100 pip, and then from there, price has still continued to go bearish, because look at the H1. So if you were to buy at this level, you have to buy for the bounce, because H1 closing really strong with bearish candle. So the next candle, the opening is still on the top, right? You can see selling pressure here, and we really know that yesterday, for the gold, right? Since the London section open, price had fallen almost 800 pip from the all-time high ATH to the close below 3,800. Then from there they bounce, right? We have that zone just now somewhere around here, and this is 61.50% Fibonacci, right? Just now I show you guys, right? You see that 50% Fib, and then you see the rejection. So meaning that the investor, they are willing to buy at 3,800. I think that gonna be significant support level for now. Okay. And we have a NFP coming, okay, Leicester at on Friday, so you can need to know of that. Okay, so the moment chip already. Okay, so to analyze your workflow, okay, so step one, what you need to do, check higher time frame. What is the trend? It's a bearish, bullish, or sideways. Okay, you need to check. Okay, up or down or sideways. Okay, marks key zone on higher time frame. So basically, you identify resistance and support on the H4 time frame. Okay, zoom to middle time frame, 5 setup forming, could be H1 or M30. zoom to lower time frame to refine entry and have precise entry. You can have a stop loss. Executes only when all aligned. Okay, so if price still bullish on a higher time frame, you need to wait for price to pull back to the support level in H4 or H1. Let's say you identify H4 and then you need to zoom in and see whenever price is approaching the key level in the lower time frame, you will see the confirmation such as price action, divergence, or rejection. Whenever all align, okay, and then you just buy in this case, okay. All right. So risk management rules. So protect your capital by risk only 1 to 2% per trade. That's maximum. Stop loss below or above structure. Okay. Maximum 1 to 2 risk and reward ratio. But that's the have to be like have to be 1 to 2, but at least 1 to 1 risk reward. All right. Scale out at a key level. So basically, if you want to do the setup or highlight the key level on H4, for example, you buy H4 setup. Whenever price rising, you don't change to M15 and look at the M15 charts because the lower time frame you will see that okay, price is rising, and then from there you will kind of like falling. Because in the lower time frame, this is gonna be the resistance with M15, okay, and this is the resistance for the H4. It is normal that lower time frame price gonna test the resistance level, falling back, okay, and after that continue and break above the resistance level, which is our lower time frame, to find the higher time frame resistance level, which is H4. Okay, so just stay and look in H4 instead only look M15 because like I just mentioned, you will get panic when you see pullback. Okay, move stop to break even at 1 to 1. You buy here. Okay, let's say you buy here. Price have break above the resistance level, which is M15. You can chip your SL to above here and then continue for price to rise. Okay, never trade without all confirmation. That's why I say confirmation is very important. Okay, wait for confirmation and then you execute your trade. Okay. Okay, common mistake to avoid. So don't do this. You're trading every setup you see, forcing trade in ranging market, ignoring higher time frame bias, over leveraging. Okay, basically you over trade. Do this instead. Okay, wait for perfect alignment, stay patient in consolidation, always respect the larger trend, trade smaller, win bigger. So whenever you choose setup, basically for a trader, you just take a trade 1 to 2 trade per day. That is good enough. Try not to force yourself, even though like you know that there is a ranging market, right? You know that there is a ranging market. You can trade with the ranging market. Okay, here is the ranging, for example. Okay, so if price in between, you can't like you don't force yourself to trade when price is middle of the range. If you want to sell, okay, price have to touch the above the range, and you're gonna buy when price is at the lower range, then you buy. Okay, but if you see that okay, price ranging, maybe you don't trade that, it's okay. Okay, whenever you see price break above the range, what is wait for price to pull back or retrace and then you can buy. Okay, but if price did not pull back to the range or to the box here and price rising, you don't chase the market by okay anyhow like jump in and catch the and buy here because sometimes you buy here. Okay, price rising and maybe for you, that's gonna be your bad habit. The next time you jump in again, what if price pull back another 100 pip? Then you will get stop out. Okay. So you guys have any question? I'm gonna pause here for a while. Okay. All right, so this is gonna be my last slide for today. So the key takeaway for today, so we say that never trade at a single time frame in isolation. Okay, always check higher time frame first. Only enter when all time frame aligned. Quality over quantity. Doesn't mean like one day you take a trade 20 or 30. Okay, you should find a quality trade, which is maybe 1 or 2 good setup, and then you trade. Okay, wait for perfect setup. One high probability trade beats 10 medical ones. Okay, patient is a professional age. So basically, what this mean? This I want to like sum up. Which is just have to be patient and wait for the perfect setup. Perfect setup. That's it. And you need to take 1 to 2. That is good enough. Okay, just be patient. Okay, if you see the ranging market, you see that the setup is not very good, or like maybe today you did not trade, that is okay. Let's say today no good setup, and then you force yourself to trade, end up you may lose everything. Okay, just be patient. If today there's no good setup, we can wait for like tomorrow. Okay. All right. Okay, so this is gonna be my last slide for today. Okay. This is other Vantage social media channel. You can just go and follow. Okay, this is the Instagram, LinkedIn, or Facebook. Just go and follow. All right, so now let me just do the highlight key level for you guys today for Go. So now, what do you think about this? I think Go gonna make an all-time high again. All right, on the highest time frame, we know that they make the break of structures, right? This is the BOS, and this is the BOS here as well. Okay, I'm gonna mark out for this breakout structure because it seems, but we need to wait for H4 to close, right? But it seems like H4 is going to, push above that level. Okay, now H1, right? In H1 time frame, this is the body, right? This is the body. So now I'm gonna say in M15. In M15, it already show me that price has break out of the M15 high and the body break close above. You can see that the pullback, so meaning that the seller who are willing, or investors willing to buy at 3x70. Yeah. There'll be someone already buy at 3x70. Right? You will see that. Okay. Now M15 show out already breakout. Okay, look at this week, right? Here, how are we gonna say, because you said that, oh, but H1 haven't closed, but you're gonna push below. Look at this one. You go to M15, right? This is the body. You're gonna say this is the body, correct? You see M15 is closed below, but this M15 had closed above. So meaning that would be investor willing to buy at 3x70, because I think they're gonna target under the all-time high. Let's say if I had back above this, okay, close above, the next key level that I can use, we're going to use the Fibonacci extension, would be this zone, this level. That's going to be the next resistance level. If price is close above, okay, if price is close above, that's going to be the next resistance level that I would say. Okay, if price is close above, now I go back to the M15. Wow. Now, if somebody just now somebody buy here, now a lot of people still want to sell, right? So what we're gonna do here, whenever the market structure is not very clear, we don't trade. Okay, to me, if I want to buy, if I want to buy, I'm not gonna buy here. At least I'm gonna buy at somewhere around this level, which is M15. I saw there is the like OB here. I'm gonna put my stop loss at this level, meaning my stop loss gonna be at 38.53. Okay, and you can see that just now you buy, now there already somebody sell off. Okay, don't forget of this ATH 3x75. Okay, this could be breakout. You where the breakout, you might, but just now you see that there are people who buy right now, they are selling off. On the H1, right, on the H1, you will see that price still haven't finished, haven't closed, we still have 16 minutes. By right just now, if I were to buy at this level, right, at the 70, price rising to 74, for scalping only 40 pip. Okay, you see price rising 30 pip, we're gonna chip the stop loss here to break even, right, to break even. Now price falling and hit our already break even and falling. Usually if you want to trade, you need to protect your capital. Now price is falling. Okay, price is still falling, so you want to buy, this is gonna be our buy entry. This is gonna be our buy entry at this level. Okay, at this level, you can wait and see whether price gonna respect this. Okay, but it's gonna be soon, so you want to buy. Okay, yeah, but just now price did not break below this level, right? This is a support level for the M15, right, you can see that resistance, support, have rejection, and then rising. The body, I think, close above the body already. So now we're gonna wait for price to pull back to this, and then you're gonna buy. Or if you want to buy at the retrace at the box, which is here, high risk, but this is the box. Price break above in M15, you wait for price to pull back. Okay, I'm gonna draw an M15, break above, pull back, now it's rising. Okay, at 70, let's just say 70. Okay, 80, 70, and then you buy based on the M15. Okay, based on M15, we would say that M15 was ranging. Okay, I would say that the body, and then the body is still close above the 38.58, and now, right, pull back and retrace and you buy. Then this one where you take profit, you just have to say that another all-time high, just plus another 100 pip, that would be 3x76. 3x76 gonna be a TP1. That would be meaning that above the all-time high, this is gonna be the TP1. And then you add in another 50 pip, that will be 3x81 TP2. This is gonna be your TP2. Okay, which is we buy here. Basically buy here and the breakout pull back, second buy, the price pull back here, right? But price have breakout of M15 box pull back. Okay, now if price is rising from, let's just say you enter at 68, 69, now it's about 30 pip. Now it's about 30 pip. Okay. TP1, 70 pip. TP2, 1,200 pip from this setup. Okay. Now it's a little more than 50 pip rising from the pullback and retrace. Pullback retrace 60 pip right now. Okay. This is M15. I would say the target that we're gonna use the extension based on this swing high, right? It's gonna be the extension. Yeah, at let's just say 38.90, somewhere around there. 38.90. Okay. Yeah. This is H1. Right, we will get entry at this level based on M15. Now price has almost hit our take profit. TP1 at where? 38.60. Okay. If M15 closing like that, this is gonna be maybe come back here. There might be people who want to buy again. All right, guys. So this is set up. If anyone of you guys buy, I'm happy for you. Okay. Okay, anyone want to request? Guys, if you send me the request in app, I cannot, I can't see because there's so many spamming messages. Okay. Okay. Slowly you're gonna see price hits our take profit, all right? See, we trade on the high, we follow the higher time frame. Remember, it's the very strong bullish move. I think in H4 likely price gonna make the all-time high, and you look at the H1 strong. Okay, price had hit our TP1 is so quick. Okay, hit and close above 38.76. That is our take profit. Okay, that is our take profit at this entry. Okay, and this entry, we break above, then pull back, we buy here. Take profit 38.76 TP1. Now you want to hold to 38.81. Okay, you have to move the stop loss to where? To at least protect your capital. If you're happy with the profit, and then you just close. If not, you can shift stop loss from the below to here, or just your entry or to here at least. It's up to you. Okay, or you can just close half of the lot size and then you hold. Now it toward our second TP, which is another 50 pip. All right. Wow. It's okay. London is coming up. Now it's pre-market for London section. Now London is coming. Okay, it's gonna hit our take profit. I think you can aim for psychological number where 3x0. You can aim for the TP2. Then because another like just 10 pip, I will take profit TP2. So this approaching. Okay, so basically this trade setup it work out. Okay, TP1 is hit and TP2 is approaching. All right, guys. Okay, so this gonna be today. I'm gonna go back and summarize again. So key takeaway today, don't forget that never trade with a single time frame. You should have multiple time frame. Always check higher time frame first. Okay, only enter when all time frame aligned. Okay, quality over quantity. Wait for a perfect setups. One high probability trades beat 10 medical ones. Patient is the professional edge. So these are the key takeaway for today. Okay. If you always trade with only one single time frame, from now on, you should look for 2 time frame or 3 time frames. Higher key level on high time frame, you go to M15 or M5 to enter your trade. All right, guys, that should be all for today. Thank you so much for your time. I will catch up with you again on next Monday for live training section. All right, guys, bye for now. Take care. Good luck to all of you. Bye bye.